Alex Friedman, Chief Investment Officer at UBS, responsible for $830 billion worth of assets, is there with our own Stephanie Ruhle, both at the Milken Conference. Stephanie, over to you.
Thanks, Deirdre. That is right. I'm here with Alex Friedman, CIO of UBS's Wealth Management Division. Now, Alex, UBS CEO Sergio Armati has said himself wealth management is the crown jewel of UBS. You joined the firm a year ago. How are you keeping that jewel shining?
We're polishing it every day.
Well, what's the actual strategy?
I mean, at its essence, the strategy is to combine the best investment talent we've got in 70,000 people across 40-plus countries in a focused way for investors. And what that means is we view ourselves as essentially an investment management organization. But unlike any other investment management organization, we've got a fantastic investment bank that gives us insights into every market. So we can look both kind of from the top down as well as from the bottom up.
Well, we hear about that a lot. You're going to combine some of your efforts, leverage off what you have in the investment banking side to what you have in the wealth management. But how do you actually do it? Give me an example of where those businesses are moving together.
Sure, I'll give you an example. If I'm sitting in Zurich and trying to look at every asset class across every region in the world, what really helps is when I can call someone up in Singapore and say, help me understand what the smartest investors in Singapore are doing from a trading perspective, from a flow perspective, what are they finding most risky. It's hard to do it when you sit in some centralized fashion, so you really need the ability to leverage people all over the world.
Well, where do some of your biggest clients want to be right now? When we think about investors, we think about money managers and hedge funds, and they need to please their investors. But some of your clients are the world's wealthiest families. Where do they want to put their money?
You know, things are very different, as you've heard from many smart people, than necessarily the last 30 years. We're in this multi-year, probably decade-long deleveraging dynamic. We've got huge population and demographic changes, and we've got really some fundamental different economic environments. So the first thing really smart investors are doing is diversifying heavily out of the major currencies. So
going where?
Well, people who are, say, 90% in the dollar or the euro are spreading their assets across multiple currencies in the Norwegian countries, in Scandinavia, in Singapore, in Canada, in Australia, in numerous kind of ways to balance their risk. That's one key.
A lot of UBS clients are Europe-based. Are they taking their money out of the region? Because one would think they understand the debt crisis there more than anyone.
Yeah, I don't think anyone has a crystal ball, so they don't know exactly where Europe is going over the next 6 months or a year.
But you would think a billionaire European family would understand what's really happening because they're there. So are they taking their investments out of Europe and, let's say, putting them in the U.S. or putting them in Asia?
You know, the most common dynamic for any billionaire is they tend to be very long-term thinkers. So what they're not doing is panicking and thinking over the next month, 3 months, or 6 months. So are they getting out of Europe? No, not necessarily. Europe is a huge part of the world's economy. But it's important to note that in 1980, Europe was about 35% of the world's GDP. Today, it's about 25%. So they are looking very clearly at changes around the population age in Europe, what that means in terms of the debt dynamics and where growth is. And Europe is basically in a recession right now. They're looking at the emerging markets, at the United States, at areas where there's much more growth.
Are investors ready to get yieldy yet? And by yieldy, I mean illiquid. You know, we're in this low interest rate environment, so everyone is searching for yield. But with yield, you may have to give up liquidity, and we know how that turned out for so many investors in 2008. Are people ready to get back to illiquid investments?
Yeah, that's a great question. I think there are two answers to that. The first is, if you believe inflation is coming, then being in cash isn't going to do you any good, and being in government bonds isn't going to do you any good. So the smartest investors are investing in equities where they think they have strong companies that can price in inflation in terms of raising their prices on their products. Are they kind of getting caught in the illiquidity trap that we saw in 2008? The smartest investors know. I think they understand the illiquid portion of their portfolio has to be looked at in the context of all of the rest of their investments. But that is a balancing dynamic.
Well, all of your clients aren't billionaires. They're all not the most sophisticated. How do you get them out of sitting in cash? Because right now, a lot of people would say, I want to keep it safe in cash and put their money to work, because you need them to put their money to work for UBS to have strong returns.
I mean, the first point I would make is that we view ourselves as a fiduciary for our client assets, so we look at where we think the best investments are. That's what I focus on, not what is going to be particularly one way or another for UBS. What we try to do is explain the central banks are seemingly hell-bent on printing money right now. We have $2.3 trillion in liquidity that's been put out in the last few months. That will have an inflationary dynamic, most likely. So if you're in cash or you're in government bonds, German bond yields are about 1.8 or 1.7%. You're paying the German government money in order to hold your money. You're not keeping up with inflation. So if you're a family that's trying to preserve wealth, that doesn't work as a strategy. So we try to explain the fundamentals, and then what usually follows is the need to diversify, to invest in assets like equities.
And if they're trying to preserve wealth, UBS is the place to do it.
Well, we think we're good at it.